what do we do? Well, I could say that we have a partnership preferred approach geared towards increasing export capacity by bearing a portion of the risk. Then Louise would think, great, that is definitely a sentence. But what does that mean? What does that mean exactly? And I think that's fair. I think that's fair to think that way. So let me put it to you like this, Louise. I know Louise is a sports fan. Any other sports fans in the audience? Sports fans? Great, yeah. I'm a big fan. I love to witness incredible feats of athleticism. I mean, with these Olympics going on, these are amazing people doing incredible things. So to achieve Olympic level success, they didn't get there by themselves. They need a little bit of help, a little bit of support. So our Canadian companies aren't that much different. These are amazing people doing incredible things. So much like a Roots or Lululemon might help an athlete go farther, faster, leverage their inherent abilities. Here at EDC, we help Canadian companies go farther, grow faster, leverage their inherent abilities. So allow me to explain how we do that with actual product offerings. Examples from our Credit Insurance Solutions Suite, our Working Capital Solutions Suite, and financing. Okay, first let's talk PCI, the flagship product within our Credit Insurance Solutions Suite, Portfolio Credit Insurance. Imagine this. I'm gonna stick to the sports reference. You're a hockey stick manufacturer and you're looking to broaden your international, you want to expand internationally, so you pound the pavement, you go on some trade missions, and great success. You land a contract with a Slovakian distributor. It's amazing. This contract's going to significantly increase your sales levels, but you're going to need to ramp up production to keep up. And to do so, you're going to need to increase your operating line. So currently, your operating line at the bank is margined against your domestic accounts receivable. So now that your sales have gone up significantly, you think you can strut confidently into your bank and proudly slap down your new sales contract, and they're going to increase your operating line accordingly. Well, big problem. They don't recognize your foreign receivables as collateral, and they're not going to increase your operating line. Basically, you hear them saying, stop. EDC's response? Go, grow, succeed. This time with the help of the Portfolio Credit Insurance product, which will guarantee 90% of your foreign receivables. Now the bank's got your collateral, you can increase your operating line, and not only that, you get peace of mind that you're gonna get paid from your foreign buyer. Put me in, coach. What a great deal. Okay, so you know the deal now. You know the deal. You're an exporter. You know how it's a little bit nerve-wracking to expect payment from a foreign buyer. The PCI product eases some of those woes. What if the risk profile was reversed? What if it was a foreign buyer that was nervous about your ability to deliver on the contract? They might ask for them to post a performance bond at their bank to ease some of their woes. It's not unreasonable. You're confident in your ability to perform, so again, you strut confidently into your bank, and they're happy to help you out by posting a performance bond. But, big problem. They want to freeze assets in equivalency to that bond value. You need those assets to deliver on the contract for which you're posting a performance bond. Hey, you need those assets to keep the lights on at the factory. So you hear the bank saying, stop. EDC responds, go, grow, succeed. This time with the PSG, the Performance Security Guarantee. How the product works, guarantees 100% of that performance bond. What does that mean for you? You don't need to freeze up a penny of that working capital. And you can focus it on what it is that you do best, which is making some sweet sticks in this instance, making every shot count. Okay, so you're in the business of making shots count, and you're doing well. You're swimming with the big fish now internationally. Sales are up. Sales are way up. In fact, business is so good that you have more sales than you do capital. Your accounts receivable can't keep up to your sales levels. I mean, as far as problems go, it's a pretty good problem to have. It's like when you had that growth spurt, or maybe the one you're still waiting for. You know, you felt like your legs were kind of like wobbly underneath you. So what you need to do, you need to widen your stance, increase your foundation, increase that pool of working capital. But business is booming, so you strut in again, confidently into your bank. And they say, foreign markets are risky. I want to look backwards before moving forwards. And you're like, how am I supposed to show you an improved financial profile next year if you're not allowing me to improve my financial profile now? It's a whole chicken and the egg scenario. It sounds to me like they're saying, stop. And I think we know what EDC says to that. They say, go, grow, succeed, this time with our pre-shipment financing solution, the EGP, the Export Guarantee Program. How this works, guarantee 75% of that credit facility, which means now we're sharing risk with the bank. They're happy to give you the funds that you need, and you can continue to fly out there. High five. All right, so you're doing great. In conclusion, there are a ton of athletes that showcase on the international stage what they can do in Korea right now. With the PCI, the PSG, and the EGP, EDC is here to help Canadian companies doing something very similar. So, we want to go for gold. I think Canada can own the podium with the EDC's help, and that is what we do. Thank you.